Alright, and good afternoon. Welcome to this, our next in our audit and assurance update. For those of you who don't know me, my name is Misha, and I have the benefit of leading this wonderful assurance team here at the External Reporting Board. And it is our absolute pleasure to bring the whole team to you today to give you an update on some of the things that we've been working on. Our agenda for the next hour looks like is we are going to give you a bit of an update on some guidance that we've been working on to help support the assurance of greenhouse gas assurance. Then we're going to cover our recently issued standards on less complex entities. And then we're going to go through recent consultations and things to look out for. What I would like to do is also to welcome Dennis to our team. Dennis is a new senior project manager, and you will have the benefit of meeting him online today as he talks a little bit about what we're doing on technology. So without further ado, I will pass over to Karen to get us going. Over to you, Karen.
Thank you, Misha. And I would like to start today by talking about some of the implementation support and guidance that we have recently released to support NZSAE1, which is our greenhouse gas assurance standard for the assurance of the greenhouse gas disclosures within the climate statements. So we have recently released 3 in our series of guidance. The first of these was released in June 2025 and covers uncertainty and data quality. So this first piece of guidance is written for both preparers and assurance practitioners, and it includes examples of considerations that preparers and assurance practitioners should consider when they are doing the preparation of the greenhouse gas disclosures and when the assurance practitioners are assuring those greenhouse gas disclosures. Some of the examples that are included within this guidance are what the assurance practitioner is required to consider when an entity selects a measurement method. So the Aotearoa climate standards do not prescribe a measurement method for greenhouse gas disclosures, and the assurance practitioner should seek to understand what method the entity has chosen and why, and whether they have disclosed their rationale. It also includes other examples of other practical scenarios that you may see while you are doing that assurance. The second in this guidance is for greenhouse gas consolidation approaches. So the part 2 and part 3 have been written for preparers, but they are also relevant for assurance practitioners. The second one covers the different consolidation approaches for greenhouse gas preparation, so operational control, equity share, and the third one includes the excluding greenhouse gas emission sources, so includes guidance about those greenhouse gas emission sources that are included under the Aotearoa climate standards. So I would encourage you to have a look at these if you do assurance of greenhouse gas disclosures. The second part that I would like to highlight around our implementation support for greenhouse gas disclosures is our assurance reports. So our illustrative assurance reports for the standard. This was released a couple of years ago now, but I just wanted to highlight it as we are now in the mandatory phase for assurance for the greenhouse gas disclosures. The examples included within the staff guidance are examples of limited assurance reports, reasonable assurance reports. There are also reports for both of the 2 international standards that are allowed under NZSAE1. So there are reports under ISO 14064 Part 3, as well as under NZISAE 3410. There are also examples of the communication tools, so the required communication tools such as key audit matters, as well as examples of other matters and emphasis of matter. Secondly, we produced this year our Greenhouse Gas Assurance Report Explainer, and this explains the detail behind the Greenhouse Gas Assurance Report. We released this as these reports may be new and unfamiliar to some users, and we wanted to explain what is required to be assured, what is not required to be assured, and what is included within the assurance report, and what this means. And finally, the last bit that I just wanted to highlight was our greenhouse gas assurance snapshot. So in line with our work program, we are actively monitoring the assurance over greenhouse gas disclosures. And this is the second in our assurance snapshot series. 163 climate statements were lodged by the end of July 2025. And as part of the snapshot, we are looking at what standards are being used to do the assurance. So 70 of the 79 reports that had assurance were done under ISAE NZ 3410. And we are monitoring what key matters have been included in the assurance reports. So some examples of this were key matters covering completeness of disclosures and exclusions. So I encourage you to go to our website and have a look at the snapshot. And now I would like to hand over to Bruce to talk about some recently issued standards.
Cool, thanks Karen. So the main recently issued standard is the ISIF LCE. So that's the auditing standard for less complex entities. And this was approved in June this year. It's an auditing standard that's available for use by auditors if the entity has the characteristics of a less complex entity, or LCE. And this standard is applicable for periods beginning on or after 15 December 2025. Today, I thought I'd go through some of the key messages that we have over the standard. So first up, it's a standalone auditing standard that's tailored to the needs of an audit of a less complex entity. So it's standalone, so the auditor only needs to refer to the ISIF LCE rather than having to refer to the ISIS or NZAS 1 revised when undertaking the audit. It's built on the foundation of the current auditing standards. So audits performed using the ISIF LCE provide the same level of assurance as the current ISIS, that is, reasonable assurance. Using the standard does not change the quality of the audit, does not necessarily mean less work for the auditor, and does not necessarily result in lower costs. It really recognises that this is a different audit, not a lesser quality or a scaled down audit. It's about doing the right work, including the right amount of work in the right areas, and having proportionate requirements to drive that work. In deciding whether or not to use the standard, the auditor uses Part A and considers the qualitative characteristics of a less complex entity. And the auditor applies their professional judgment in determining whether an entity is an LCE or not. And the standard requires the auditor to document their judgment as well. We'll soon be issuing guidance around the qualitative characteristics set out in Part A, so keep an eye on our newsletter and we'll let you know when this is published. Over to the next slide. So why does this matter? Well, we recognise that there are many small to medium-sized entities in New Zealand that either are required to be audited or voluntarily get an audit. This includes charities, sports clubs, schools, small businesses, and early childhood centres, and those sort of entities. And prior to the adoption of the standard, all entities, regardless of complexity or size, were audited in accordance with the same auditing standards. So what we're doing with the standard is really recognising that one size does not necessarily fit all. Also, we've heard support for adoption of the standard from the profession in New Zealand. So we've made the standard available for use in New Zealand. It's internationally aligned, so it's based on the ISIF LCE issued internationally, but we've made it locally relevant. And one example of us doing this is adding Part 11 to the standard to enable auditors to audit service performance information alongside the audit of financial statements. So on our final slide on this topic, a reminder that the standard is available for use. for periods beginning on or after 15 December 2025. Now, there is an option to early adopt, and that's for accounting periods ending on or after 17 July 2025, noting that if you do early adopt, you'll need to disclose this in your auditor's report. We're going to be holding a deep dive webinar on the ISIF LCE on the 23rd of October at 12:30, so do sign up on our website. Also on our website, there's lots of implementation support available, both from the IAASB, the International Auditing Standards Board, and also us here in New Zealand. So we've published a couple of videos and links are in the slide pack. We've also got a couple more underway on the authority part A of the standard and another on reporting. We're also in the process of developing some guidance documents for New Zealand auditors, one on the qualitative characteristics of a less complex entity, then another on illustrative auditors reports. We'll also be updating our website soon with relevant auditors' responsibilities to enable auditors to link to our website when issuing an audit report under the ISIF LCE. And finally, we'd love to hear from auditors if you're planning to use the standard or if you're using it already, and as you implement it. If you've got any further comments on the standard or suggestions on guidance that you'd find useful, please do get in touch with us. And our contact details are on the ISIF LCE webpage. That's all from me. I'll hand back to Karen.
Thank you, Bruce. And it's my pleasure to talk to you today about an open consultation that we have at the moment. So this consultation is on international alignment for sustainability assurance, ethics and independence, and using the work of an external expert. So with this consultation, we are seeking views for making available for use 3 standards that have been issued internationally and released as a package internationally. This consultation closes in 4 days on the 10th of October. So first of all, I'd like to say thank you to all of those who have already submitted, and also thank you in advance for those of you who are busily working on those submissions. We really greatly value your feedback. So the consultation covers 3 new international standards. So the first of these is an engagement performance standard. This is ISA 5000, and this is general requirements for sustainability assurance engagements. The second of these is an ethics and independence standard. So this is commonly known as the IASA, and this covers the ethics and independence considerations to be used by the assurance practitioner when performing sustainability assurance engagements. And the third of these is revisions to the code addressing using the work of an external expert. Now this one is relevant to financial statement audit and reviews, as it proposes to amend the extant code, as well as sustainability assurance. The application for these standards internationally is for periods beginning on or after the 15th of December 2026. So we are consulting early to obtain your views in advance of this date and to allow time for implementation and adoption of the standard depending on the outcome of the consultation. So how may these standards be used in New Zealand? So the first 3 of these standards are proposed to be used as an adoption within our temporary within our temporary standard NZSA1 for the mandatory assurance of greenhouse gas emissions. So they would be included as an option within the standard. They are also proposed to be used for voluntary assurance. So if an entity seeks voluntary assurance on other information in the climate statements or any other reported sustainability information. And as I said before, the revisions to the code on using the work of an external expert are proposed to be mandatory for financial statement audits and reviews, as they propose changes to the extant code PES1. So what's the impact on mandatory assurance over greenhouse gas disclosures? So as we've talked earlier about NZSAE1, that's our temporary domestic standard for the assurance engagements over greenhouse gas emissions disclosures. We will retain our this mandatory assurance standard, but this mandatory assurance standard requires currently the use of two international standards, being 3410 and ISO 14064 Part 3. And we are proposing in this consultation to allow the use of the new international engagement performance standard ISA 5000 as an option within NZSAE1. It would not be mandatory to use this standard, but we would be including it as an option. And this allows us to continue to actively monitor the market as we are through our greenhouse gas snapshot, and to monitor how other jurisdictions are adopting ISA 5000. Another question might be, what does this mean for our XRB issued standard ISAE NZ 3410? So internationally, ISA 5000 will replace 3410, as greenhouse gas disclosures are a form of sustainability information. Locally, we have not decided whether to withdraw 3410 as it is considered relevant to our local regime, as this is the assurance that is required locally is the assurance of greenhouse gas disclosures. So this is the subject and is included in our consultation, and we look forward to hearing your views in due course. And I will hand over to Lisa now to talk about another recent consultation.
Thanks, Karen, and hi everybody. Yes, so following feedback we received through outreach late last year on the reporting and assurance of service performance information, we've recently consulted with Tier 1 and Tier 2 not-for-profit entities, assurance practitioners, and users of financial statements to seek feedback to confirm our understanding of the challenges in reporting and assuring of service performance information, and feedback on potential actions to address those challenges. So we held a number of outreach events, and these were aimed at the different stakeholder groups I just mentioned and different sectors, and these were held throughout June to August. So I'd like to take this opportunity to thank all of you who participated in those outreach events and for those who provided us with a formal submission. So what were some of those key challenges that we looked at in the consultation document? So first of all, that there was a lack of clarity around the purpose and nature of service performance information, with some not seeing it as an accountability document, and that the standard may require long-term reporting. And whilst the principles of the standard are applicable to both public and not-for-profit sectors, there are significant differences between public and not-for-profit entities. And this includes that there are often resource constraints for not-for-profit entities, and consequently, they may struggle to develop a reporting framework for service performance information, and therefore may benefit from guidance in this area. We noted that there was a low maturity around service performance information reporting processes and frameworks, with underdeveloped systems and internal controls for service performance information that may not be as mature as they are, for example, for financial statements. And then there was verification challenges that were due to these systems and underdeveloped internal controls, that the documentation still may be maturing, and that there may not be the evidence available for assurance practitioners to support the reporting. And also, assurance practitioners may not be as familiar with obtaining evidence over service performance information, particularly the qualitative information, as they may be, for example, with quantitative information. So we explored two areas to address the challenges. The first one being there's possible amendments to PBE FRS 48 as a potential action. And some of these amendments to PBE FRS 48, which is the reporting standard for service performance information, included clarifying the purpose and nature of service performance information, adding a requirement for a basis of preparation, which is essentially like the accounting policies you get for financial statements, clarifying existing disclosures for significant judgments, and perhaps an authoritative appendix to clarify the principles for not-for-profit entities. We also explored the action of possible potential guidance for both reporting and assurance of service performance information. So guidance for reporting, we looked at whether sector-specific workshops to help develop materials may be beneficial. For assurance practitioners, we sought feedback on whether they felt guidance would be useful, and if it was, in what areas would they like to see guidance on. We are aware that guidance on obtaining evidence, or obtaining audit evidence, particularly for qualitative information, is an area that assurance practitioners are seeking information on. So this is an area we've already begun developing guidance. To develop this guidance, we've been reaching out to various stakeholders who helped inform who contributed and helped inform the development of this guidance. And I'd just like to say thank you to all of those who have been involved. And we look forward to being able to issue this guidance shortly. So all the areas, the feedback of the areas I've just discussed are going to be discussed by our two technical boards, the NZAUASB, the Assurance and Auditing Board, and the Accounting Board, will be discussed at their meetings later this week. So please keep an eye out for communications on this area. And now I'd like to pass you back to Karen.
Thank you, Lisa. And I would just like to provide a quick update on a recent consultation that closed 2 weeks ago. So we did a consultation on proposed amendments to the climate and assurance standards. And this consultation covered proposals to extend certain adoption provisions within the climate standards that related to the disclosure and assurance of Scope 3 greenhouse gas emissions. So I just wanted to update you and say that this has now closed and to expect an announcement at the end of October about what we heard in terms of this consultation. And now I would like to pass over to Misha to talk about some standards that are coming up.
Thank you. What I thought I would cover off today is give you a little bit of an update on where we're at on quite a large package of information which covers revisions to going concern, fraud, as well as international developments on a term called publicly traded entities, which we basically have the FNC with higher level of public accountability here and a whole lot of other conforming amendments. So the Audit Board has already in principle approved both the going concern and fraud standard. And this week we hope that the board will approve the rest of this package. So we aim to issue and gazette these standards by the end of October. These standards will be applicable all together at the same time for periods beginning on or after December 2026. So our aim here is to be able to give you plenty of notification to understand these changes and embed them into your audit methodologies. In particular, they impact the auditor's reports. And therefore, we also want to make sure that we are giving you ample time to update your auditor reporting templates. Before I get into this a little bit more, I thought I would just stand back and give you a little bit of why are we doing these changes. Going concern and fraud are two key public interest topics. So if you go back in time a little while ago, there were some very large global collapses, for example, Wirecard and Carillion. That really rocked the sort of confidence in financial reporting as well as in audits. Thank goodness we haven't had any of those disasters in the New Zealand context, but I think we can all accept that in the current economic climate, these topics of going concern and fraud are increasingly relevant. They are of importance to users, and therefore we consider that these international revisions are very important to be internationally aligned as well as locally relevant to support enhanced trust and confidence in reporting as well as in audits. So we really do think that these revisions are fit for purpose for the New Zealand context and will help to enhance trust and confidence in financial statements. We have covered some of these changes at other presentations. So what I thought I'd do today is I'm going to start with going concern, then I'm going to hand over to Sharon who'll deal with fraud, and then we'll pass to Anna who's going to give you a little bit of an update on what we're doing on those other publicly traded and conforming amendments, because we are shaking things up a little bit. We're going to do things a little bit differently, and we just want to give you a little bit of reassurance that when you see potentially a whole lot of new standards coming through, there's nothing too much to worry about when it comes to those other amendments. So let's get into going concern. I'm not going to cover all of the going concern changes today. We will be doing some deep dives and further engagement once we launch these standards. But I thought I'd tackle two areas. Firstly, looking at how these standards strengthen the auditor's work effort. So auditors have always been required to evaluate management's assessment. Management makes that primary assessment of whether an entity is a going concern. The changes that are coming through under the revised standard are really aimed at enhancing the robustness of the auditor's work effort. So what we say in sort of plain English, these changes coming through at a granular level are aimed at ensuring that the auditor kicks the tires pretty hard on that management's assessment. So, for example, the standard has more granular requirements to ensure that the auditor is thinking about the method used by management, the significant assumptions that have been used, as well as the relevance and reliability of the data that's informed management's assessment. This level of granularity will be required regardless of the circumstances. So even in the simplest engagement, where things are looking pretty rosy, the auditor is still required to make an evaluation about management's assessment, albeit that the requirements would be proportionate depending on those circumstances. Where the auditor's risk radar is up a little bit, that's when the auditor has even more to do under the revised standard, and it's more explicit now that the auditor is looking to evaluate both the intent and the ability of the entity to carry through any future-oriented plans where those are deemed necessary to support the going concern basis. In addition, the standard is clearer that if the entity is reliant on third-party financial support, the auditor also has to ensure that they are considering both the intent and ability of that third party to provide that financial support. So those are some of the changes that are coming through to ensure that auditors really do have a robust work effort to support their assessment of management's assessment of going concern. The other key change coming through relates to transparency. So there's two legs to that. The changes enhance communication between auditor and those charged with governance. This has the benefit of if the auditor's assessment and management's assessment of the going concern risks don't quite align, then perhaps it's a bit of an early warning signal to those charged with governance. But probably the thing that you've heard about and the most significant change coming out of this package is that we will be moving away from going concern as an exception-based reporting model in the auditor's report. So going forward, there is always going to be a separate going concern section in all auditors' reports. Let's have a little wee look around what that looks like. So on this slide is probably the summary of the core change. In the scenario where the auditor has concluded that the going concern basis is appropriate, there is no material uncertainty and there is no modification related to going concern. Rather than remaining quite silent on going concern matters, there is going to be a new going concern section for all auditors' reports, regardless of the entity type. Included in that section will be the statement that the auditor has concluded that management's use of going concern is appropriate. This in and of itself is not different because the auditor has always made that conclusion, but it is now being made transparently and explicitly in the auditor's report. That section also states that a material uncertainty has not been identified, but to add clarity around what this statement really means, it will also state that this is not a guarantee as the ability to continue as a going concern. If you audit clients that are FMC entities with higher level of public accountability, when there are significant judgments made to conclude there is no material uncertainty, so this is sort of those closer call situations which may have been reported as a CAM previously, this is going to be reported under this going concern section. The auditor's report will refer to those related disclosures. The good news is in the New Zealand accounting standards, there are explicit disclosure requirements that have been added to ensure that the entity is disclosing those significant assumptions. And then in the auditor's report, you're going to cross-refer to those disclosures and describe how the auditor has evaluated that assessment of going concern. So this is probably the key change coming through in the auditor's report. Just to close the loop, I'll quickly just run through. We will continue to have a separate section for a material uncertainty. So the MERG-C kind of approach, where there is a material uncertainty for all entities. Again, you're going to refer to those related disclosures. You're going to highlight those events or conditions that indicate that material uncertainty. You're going to clarify that your opinion is not modified, that the use of going concern is appropriate, and this is not a guarantee. The difference here, if you are an FMC reporting entity, the auditor's report is also going to describe how the auditor evaluated that assessment of going concern. So quite a lot to digest there. The good news is we aim to gazette these standards and issue them towards the end of this month. We are actively working on staff guidance to help you work through all of this. So look out for some flowcharts to help you understand those auditor reporting implications. And we're also working on joint guidance with our accounting team targeted at the preparer to help them understand how to go about making that assessment of their going concern, which is required by the accounting standards. Okay, so I'll pause there and hand over to Sharon, who's going to talk you through fraud next.
Okay, thanks, Misha. So let's start with what we actually mean by fraud in the context of the auditing standard. So fraud is designed as defined as an intentional act involving deception to obtain an unjust or unfair advantage. It occurs when there is incentive or pressure to commit fraud, there is opportunity, and there's rationalisation of the act. So fraud includes misappropriation of assets, so theft, as well as fraudulent financial reporting, so intentional misstatements or omissions of amounts or disclosures in your financial statements. The standard addresses identified fraud and suspected fraud, and the term suspected fraud includes allegations of fraud. It's important to note that there does not need to be a legal determination that fraud exists. It's enough that the auditor has identified or management has identified fraud or suspected fraud. So when I talk about fraud in this presentation, I'm using that term generically to cover off identified, suspected, as well as allegations of fraud. So if we move in and take a look at 7 key areas of the standard that have been enhanced with the aim of promoting consistent practice and designed to change auditor behaviour. So the first area is the reinforcing the exercise of professional scepticism throughout the audit. Obviously, professional scepticism, it's not new, it is something that underpins all audits, but it is particularly important to consider in your consideration of fraud. So the standard introduces a new requirement to remain alert for previously unidentified fraud risk factors and indications of fraud. It introduces the concept of bias and the need for the auditor to design and perform procedures in a manner that is not biased towards either or not biased towards obtaining evidence that corroborates or contradicts management's assertions. So it's about the auditor maintaining that neutral mindset. And the new standard also introduces a stand back for the auditor to stand back and evaluate whether the risk of material misstatement due to fraud remains appropriate. Secondly, the standard clarifies and emphasises the auditor's responsibility related to fraud. So the responsibility of the auditor is to plan and perform the audit to obtain reasonable assurance about whether the financial statements as a whole are free from material misstatement due to fraud, and to communicate and report about fraud-related matters. The description of the auditor's responsibilities has been moved in the new standard to the beginning of the introduction section, and it comes ahead of the responsibilities of management and those charged with governance. Now, this is an intentional placement because this is an auditing standard. Management is still responsible primarily for the detection and prevention of fraud. The clarification of the auditor's responsibilities does not change that. It rather maintains the role of the auditor as a watchdog. It does not make the auditor the bloodhound and does not make this a forensic audit. And as well, the inherent limitations of the audit have been decoupled away from the auditor's responsibilities. Fraud is hard to find, it will be hidden, but the inherent limitations do not detract from the auditor's responsibilities to be able to opine on whether the financial statements are materially misstated due to fraud. Thirdly, the revised standard reinforces the ongoing need to communicate with management and those charged with governance with regard to fraud. This is intended to provide early warning signals to directors around the risks of fraud and to enable management and directors to explore ways to prevent and detect fraud. The next area is the risk assessment. Under the revised standard, the auditor applies a fraud lens in the risk identification and assessment. So the new standard is structurally aligned with the risk assessment standard, enhancing the integrated consideration of fraud risks with the auditor's risk identification and assessment. So it's not a separate consideration. It's part of your overall risk assessment procedures. The engagement team discussion requires the engagement team to address fraud risk factors, the entity's culture, and any allegations of fraud. In addition, the auditor is required to obtain an understanding of the entity's whistleblowing program or whistleblower program. The requirements and application material related to the presumption of fraud risk and revenue recognition. So this isn't new, there's always been a presumption of fraud risk and revenue recognition. But the revised standard emphasises the limited circumstances when it might be appropriate to rebut that presumption. The standard also clarifies the relationship between fraud risk factors and inherent risks and control risks, and that fraud risk needs to be considered before control risk is taken into account. It also clarifies that the risk of management override of controls occurs at the financial statement level. So management override of controls is to be treated as a significant risk, and it occurs at the financial statement level. So then what's required when fraud or suspected fraud is identified? So all the requirements in regards to responding to fraud or suspected fraud have been brought together under the revised standard, and they're in a dedicated section. The intent here is to drive consistency in responses when fraud or suspected fraud is identified. This is an area where auditor judgment and professional skepticism are critically important. The auditor needs to obtain an understanding of the fraud or suspected fraud, including management's processes to investigate fraud and any remedial actions. And this understanding forms the basis for any further response of the auditor. So the auditor is required to perform some additional procedures unless the auditor determines that the fraud is clearly inconsequential. So the intent around the inconsequential threshold is to address proportionality and scalability of the requirements. And this might become particularly important or relevant when there are many allegations of fraud through a whistleblower program. And it helps to focus the auditor's attention on those frauds or the suspected frauds that need more work effort. Next, we've got enhanced transparency about fraud-related matters. This is both through both communications with those charged with governance and enhanced transparency in the auditor's report. And this responds to stakeholder concerns that the auditor's report particularly may not be transparent enough about the auditor's fraud-related responsibilities and procedures. So the revised auditing standard enhances transparency on key audit matters related to fraud. So these new requirements expand on existing requirements to report key audit matters using the CAM reporting on fraud-related matters through the CAM mechanism. It requires the auditor to think about the matters that have been brought to the attention of those charged with governance. So the auditor will select from the fraud-related matters communicated those that were of most significance. So it's the same filter that applies to general CAMs, will apply to your fraud-related matters that are communicated to those charged with governance. And while the standard does not specifically require communication of CAMs related to fraud, there is a very strong suggestion that it would be rare that there would not be at least one key audit matter related to fraud. And finally, the standard enhances the documentation requirements. So the auditor is required to document key elements of the auditor's understanding, the sources of information from which the auditor's understanding was obtained, and the risk assessment procedures. And if fraud or suspected fraud is identified, the auditor is required to document the results of audit procedures performed, significant professional judgments made, and conclusions reached. The documentation of your fraud-related matters is really important. You know, if you don't document it, then there is no evidence that you actually performed the procedures. I'll now pass on to Anna, who's been working very hard on pulling together all the conforming amendments and changes coming out of these revisions to the going concern and fraud standards, as well as some other amendments. Thanks, Anna.
Thank you, Sharon. So I will talk now about our approach to amending auditing and assurance standards. Our usual approach is that whenever there are changes required to the standards, we are preparing a list of these changes, and they are included in a document called amending standard. This amending standard is gazetted and it's becoming a law in New Zealand. The next step is that we are including all the changes listed in the amending standard in the actual auditing and assurance standards. So when you go to our website and will open the recent version of the standard, you will probably open the compiled version, which will include the principal text with already all the changes that were included in the amending standards gazetted so far. Now we are thinking about a different approach. So we are thinking, instead of issuing amending standard, we are thinking about including all the amendments that are coming our way through in 2025, to include them directly into auditing and assurance standards and reissue the standards. So why are we thinking about this approach? First, we know that some auditing standards they were issued long time ago, like for example in 2011, and they were changed many times. I think the record standard was amended already 15 times. The second reason is that amendments coming from going concern and fraud, revised standards, and other amendments that Misha mentioned, and we also identified some editorial changes. All these changes impact multiple standards, and there are a lot of them. Although, even though there are a lot of these changes, they are not significant in nature. We call them in the standards setter jargon that these are conforming and consequential amendments. So for example, if there is a change in a concept or terminology in one standard, this needs to flow to all other standards to make them consistent. For example, if a going concern and fraud standards now are revised, they have different structure, different paragraph numbers. Whenever there are cross-references in other standards to going concern and fraud, then all these cross-references need to be updated. So to summarize, what we are thinking about to do is to reissue standards that will include all the amendments, and the standards are consistent with each other and include some enhanced clarity. Our board is looking at this approach this week, so hopefully you will hear from us about reissued standards within next month or so. And now I will pass to Tinus, who will talk about technology.
Thank you, Anna. Hello, everyone. Today I'm going to talk about technology, and I'm going to tell you what is the international considerations that's being thought of, and also I'm going to tell you what our local initiatives are. So why is there a focus on technology? It's a fast-moving area, and it changes the way we do our audits. There's a lot of opportunities, but there are also some risks that we need to manage. And that's why at an international level, they are considering what the whether the principles-based requirements are fit for purpose, or whether there could be challenges in applying them. One example that I can give you here is the relevance and reliability of audit evidence. It might be a fit for purpose requirement, but there could be challenges in applying it when you use a technological tool. For example, making sure that the integrity of your input data is retained, whether your tool is working the way that it was intended to, and also making sure that the output information is appropriately interpreted. They're also thinking about which standards need to be modernized or brought up to date. An example here is bank confirmations, which is currently described as a manual process, but in practice it is being obtained through secure digital platforms. They're also thinking about the application material and examples that could be included to describe how technology impacts on audit procedures and audit concepts. For example, it allows me to efficiently test the whole population, reducing my need for audit sampling, or it can give me a much more granular understanding of the transactions within a population and help me to focus on more riskier areas. Then lastly, they are thinking about, or they have already identified that quality management is a challenge, and this specifically relates to generative AI-enabled tools. The reason for this is because of the decision-making processes behind these tools are not transparent. And as these tools are being used, they evolve. And this makes the explainability of how an output is generated difficult to explain. And then I should also just maybe mention that they are also focusing on proportionality, meaning that if you're auditing a smaller or a less complex entity, there might not be a need to use technology compared to when I'm auditing a large bank where there could be complex technological models where it might be a need for using technology to perform the audit. So next slide, please. And then our local initiatives. We do have a current web page on technology under the resources section of our website. It is being amended currently, and we are going to include some technological resources from the AISBA and the IAASB. So there will be some frequently asked questions and illustrative examples that will help you with some of the how to apply some of the requirements when you use a technological tool. We're also actively exploring the need for local guidance. We are talking to a number of auditors and also other stakeholders. So if you have any burning questions, please let us know. I'm now going to hand over to Misha, and she's going to talk about the post-implementation reviews. Thank you.
So very briefly, because we are actually running very quickly out of time, I will give you an update on some upcoming post-implementation reviews. What do I mean by a PIR, post-implementation review? We're basically looking into a standard that was either revised or a new standard and checking in now that it's been applicable for a couple of years, just to see how it's going, if it's working, what are the benefits of these new standards, and what are some of the challenges. So just to give you a heads up, we are looking now into the restructured code of ethics, the non-compliance with laws and regulations, which is also an ethical standard. So those are the two parts of the code which we're looking into. And we're also looking into auditing accounting estimates and related disclosures. So that's the ISA NZ 540 standard. We anticipate issuing some kind of more formal survey very closely after your summer holiday. So we look forward to hearing your views once you get back and you've dusted out the sand from your toes. we will probably close that before our next Need to Know. So I really just wanted to give you an update to look out for that. If these are areas which you have views on, we do look forward to engaging with you. So very briefly, just to wrap up, wanted to remind you that under legislation, auditors are required to submit modified assurance reports to the XRB. We've made that as easy as possible. So you jump on our website and you complete a form, upload your document, and away you go. This is required for slightly more entities than historically may have been the case. So if you are auditing incorporated societies or you are doing that assurance over the GHG, any modifications that you are issuing, please do make sure that you are submitting those through to us. And then also just a reminder to keep using our Auditor Responsibilities webpage. Jump on our Standards Navigator if you haven't done so already. That's where you will be able to see HTML version of all of our standards and hopefully find things a little bit easier, as well as our History of Approvals page. So I'll race through that because I did want to just check if anybody does have any questions from the quite large amount of content that we have covered today. So if you do have any questions, please do take this opportunity to drop them in the Q&A or the chat, and we'll do our best to answer those or get back to you if we don't have quite enough time to respond today. I'll give you a few moments just to pop those questions into the Q&A. Do you see somebody has their hand up? I'm not quite sure how we enable that in a webinar format, but if you do have a question, possibly maybe use the Q&A function or the chat function. Questions come through is, will there be an ISA for LCE for limited assurance? That's a really interesting question. We haven't contemplated doing a separate review standard for less complex entities. I guess the review standard's not quite as big as the big auditing book. So the auditing standard for less complex entities is really only targeted at reasonable assurance. But yeah, if you have views around the need for a LCE version of the limited assurance, please do let us know. That's an interesting idea. Don't see any other questions coming through. But you do have our details there. So if you think of anything else that sort of, as you reflect on this presentation today, please do drop us an email and we'll do our best to get back to you in due course. Otherwise, again, from the team, thank you all for joining us. Thank you all for your participation at various events and sharing your thoughts on our consultations. And we look forward to seeing you again in the new year at another Need to Know. Enjoy the rest of your afternoon. Mā te wā.